Today, Bitcoin closed at its third highest weekly close in history. This suggests that we're going to see a new all-time high relatively soon, which then begs the question, is this cycle going to be over earlier than most had anticipated? In today's video, I want to show you something that might seem like it would look like the cycle could be over early, but in fact, it could just be building up to bigger things. We want to uncover the left translated cycle, but go into a little more detail of how this could flip, how it could fool the majority of people, and how it could turn into a right translated cycle. Stay with us, hit the like button, subscribe to the channel. 3 out of 10 of you haven't hit that yet. It's your home of macro cycle analysis. We cover the stock markets, Bitcoin, crypto, and of course, the real estate cycle. We're here from the bottoms through the tops and back again when these markets eventually collapse. Links in the top of the video description for our free TIA report. That'll be out tomorrow. Make sure you're on board with that to get the latest update and altcoin analysis as well. That is coming out very, very soon. And TIA Premium if you guys want to get stuck into your trading. All right, we have the S&P to get through before I get into Bitcoin and some of those right and left translated cycles, essentially looking at the possibility of this market ending early, the whole bull market boom ending early. But in fact, what might come after that period of time and how it could play out and I think potentially fool most. Now, this is just a theory. We will continue to follow it up on the channel. I think that's the big thing to look at. But before we get too far into these sorts of ideas, let's take a look at the S&P 500. It closed up at its highest ever weekly close in history. It had its highest ever monthly close as well, as we covered on Saturday in case you missed that video. And essentially, there has been no sight of any sort of significant correction from this run-up since the October low, which then begs the question to many, when is this thing going to pull back? Is this getting way too overheated? Is it going to collapse? You might know if you've been watching the channel. Just a quick recap, I don't think that we're going to see any sort of major collapse based on the macro cycles, which we've been covering for years now on the channel. But in terms of the pullbacks, as we can see from previous bull markets, and this goes back for decades upon decades, so I won't waste your time on that. But when the markets get going into new, fresh all-time highs, there's very little in the way of significant corrections. So we're going to take a deeper look at the time to recover from pullbacks on the S&P 500. Now, this is important for our Bitcoin cycle as well. As you know, we've been covering the S&P overlaid with Bitcoin, maybe giving us a few warning signs about the Bitcoin move to the upside and when this mega bull market begins. Over the course of history, looking at the accumulation stages throughout the S&P 500, the S&P 500 has broken to new highs, and in most cases, new all-time highs, because essentially the market's been going up since the bottom here in 2009. What's happened on the S&P, push into fresh highs and then a correction, push into fresh highs again, then a correction, while Bitcoin was underneath its old all-time high. And then everything goes silly and the markets just scream to new fresh highs. Now, this is still going up, but we're on the S&P 500 chart, yet Bitcoin was going down during that particular period. And essentially the market was getting ready to roll over here. So the S&P 500 was getting ready to pause. And as you can see from the accumulation points, it rolled over a couple of times, got back into the end of 2016 where we had the election. It was the Trump and Hillary Clinton election. And then the markets went crazy from that point again. You had the BTC bull market along with the bull market in the S&P 500. Same deal again. Bitcoin bear market. The S&P still had some fresh highs, but it really didn't go anywhere for a considerable amount of time. And then the accumulation for Bitcoin, the S&P broke out to a new all-time high, pullbacks. And then COVID happened. And then again, it broke out into new all-time highs. And then it pulled back. And then everything went silly again in 2021. This time, however, we've seen the S&P literally just go straight up from this point, and we have not even seen a pullback. Like we saw in the previous cycles, these were fresh highs for the S&P 500 because it was still just trading underneath the old all-time high after the GFC. So give it some slack here. It was needing to build back quite a lot of points coming off a 57% correction. Moving forward to where we are now, you can see that we've just been going straight up and we really haven't seen any sort of significant correction. It's only been about a 2.5% correction as the biggest correction that S&P has had after it's pushed into new fresh all-time highs. Essentially, we had the breakout here, small pullbacks, Sure, we had the COVID collapse. That was pretty mega. Then we had another push up, another pullback here, back into new fresh all-time highs. So really not much of the way of any sort of pullback yet. Should we see some sort of pullback, anything more than what we've currently seen? So far, we've seen pullbacks of roughly 2 to 2.5%, nothing really significant here. If we look at anything 5 to 10%, the typical time to recover has been 1.5 months. We see something that's around 10 to 20%, it's been about 4 months. So the average months to recover, average here. Bear markets, 20 to 40%, it's taken about 13 months to recover. Major bear markets, which would be something like the GFC, more than 40%, there is your 58 months to recover. So about 5 years, which was pretty similar to what happened back at the peak of the GFC. It was about 6 years to recover from that point. So looking at the pullbacks and just seeing how they've actually played out. We go into a weekly chart. You can see from the top here, this one here was an 11% pullback, and then it took about 19 weeks to recover. 19 weeks, about 5 months. So if we saw a 11%, what does that look like here? About 4 months. So essentially it came almost within that exact average period. It took 19 weeks, just short of 5 months. The average here is 4 months. We can look back to the rest of these points here. You can see the correction. These were single digits, 8.5%. This took about 15 weeks to recover. That would be just under 4 months. And so that was a little above the average, but then you had one that was a little below the average here. And then you also had a pretty significant drop through 2022, which took 2 years to recover. So that would be 24 months. And it says here 13 months to recover. But when you average it out to the COVID collapse, just using a couple of points here, you can see to get to a new all-time high, it took about 26 weeks, it's only 6 months. So it took half the amount of time. One was double, one was half. Things are looking pretty well on track for any sort of average moves should we see some sort of correction. And so what we've looked at before is a possibility of a single digit correction, so something 10% or under. And so the time to recover would be about, on average, 1.5 months. So if that happened to occur now in March and a pullback here of anything sort of, again, single digits, 1.5 months later, should it happen from now, which we don't have any confirmation of that yet, well, 1.5 months would take us somewhere into May to recover, just looking at the averages. So looking at any sort of pullbacks in the single digits, it wouldn't be very long to recover back to new fresh all-time highs, which also lines up with the possibility of the S&P 500 having a pullback and then pushing to fresh highs again, and essentially all but confirming another Bitcoin all-time high, massive bull run, if in fact we don't already see it by the time I drop this video out, because where we currently sit for Bitcoin is at about $64,000, which is just 5K short of the previous old all-time high at $69,000. And as we just closed out the week, well, the week closed out at the third highest week in history, which means the market has essentially said that it will see a new all-time high. Now, the only question is timing. And we've got a few bits of timing to get through when it comes to the left and the right translated cycle. But let's first look at the cup and handle. I've seen this come up a little bit. Let's try and make it more objective than subjective and look at the points at which the market could push to new fresh highs. What sort of price targets would we be looking at for Bitcoin if we saw a cup and handle play out? So I've got the first cup and handle played out here. In terms of the cup and handle, to make a long story short, essentially they don't need to go right to the top. It should normally retrace about a third of the previous advance or somewhere up to roughly 2/3. So if you saw it from the top to the bottom and back to the top, you wouldn't necessarily consider that a cup and handle, although the pattern could look like that, where you might see the tops come into play, a double top form, a pullback at this point, which would be your handle, and then the market to shoot up again. Typically, it's usually within a pattern itself, and you don't want the pattern to go on too long. And in the case of the previous all-time high to the current price, if it was to be hit 69,000 in March of this year, that would be something like close to 2.5 years. And it's probably a little bit long for that pattern. Nonetheless, let's just use what we have on the chart right now, going from the March 2022 peak to the ETF top and ETF correction peak here, to use it as a handle. That was in January, so still a pretty significant amount of time. I'm just looking at that cup and handle. You'd measure the top to the bottom in a vertical line for price, and then I like to project it off the low of the move from the correction here. So basically the handle bottom. I don't like using it from the top of that move there. I think it's more relative to use it from the pullback to then see if you get that same sort of price projection to the upside. Now, if we're using it that way, you use it how you like. If we're using it that way, from the bottom to the top, it takes us out to about $71,000, around 71, 72K. So from where the price currently is at 63.7-ish, which would be the top, around the top of this bar, it has hit 64,300 so far. But basically to that price target of about 71, you're looking at 11 to 12% until this cup and handle action plays out. So basically that pattern to repeat itself in terms of price. Now, have we seen that before? I think so. We've definitely seen it on the S&P 500 right here. As for the target, it's nearly there. It's 100 points away from hitting that target from the July top to the cycle low bottom of October, projected from the low here in October as well, 2023, to that top price. It's about 100 points away. In the past, it's done it before. You got the correction in 2018 to the handle, to the push out, to the upside here. It almost hit it dead on to the point. So a nice cup and handle play out again. And of course, we could go back through history and try and look for a few more. Essentially, it has legitimacy, but it's a matter of time as to when that price gets hit. So as for Bitcoin, about 12% away. And as for the S&P 500 from its current prices to that peak, about 2.5% away. Just using these patterns alone, we could still see some more upside. We could still see it more on the S&P 500. I think most will agree that we could still see some more upside for BTC. As for the Google Trends, we are seeing more upside now. Finally, after quite some time, we haven't seen Bitcoin really hit those search volumes. Just this week alone is starting to hit fresh high prices around the point of the ETF. So the amount of hype that was getting shown up on the ETF in January, we're starting to see similar levels now when we just review the last 5 years. So going back just to the 90 days to get things scoped in a little more, you can see that we have hit a higher search volume for Bitcoin than was at the peak of the ETF. A little bit of a pullback over the last day or two, but that is showing signs that there is more retail, there is more energy, there is more search volume, obviously, for the term BTC. And of course, as we get closer to that all-time high, this could then spur things over the top. And all you need to see is a few more of these days of these high search volumes, and you would see Bitcoin push way over that $69,000, which then leads many to believe, if you hit that like button as well down below, that we could see a left translated cycle. Now, we've covered this on the channel before, looking at the 4-year cycle, not your halving cycle. Screw the halving cycle, get rid of it, throw it away, forget about the halving cycle. Just look at 4-year cycles measured from lows to lows. Of course, you do what you want. This is the way I look at things, because at the end of the day, you could see this market push to new fresh highs maybe before the halving. There's still a few more weeks to go, and that would just throw a spanner in the works, and this whole halving theory is basically gone out the window. Now, if we are to see new fresh highs, it could be a left translated cycle. And what that means is you would see a all-time high, or you'd see basically the top of the market cycle, which would be more accurate. It doesn't need to be a new all-time high, which is something that the halving people look at, but you could see a cycle top in the first half of the 4 years. And the 4 years is looking specifically at low to low with a 50% line through the middle. You've got a left side and a right side. If a top happens in the left side, well, you've got a very strong market at the beginning with a long time to be weak. But if you have a top in the right side, you've got a very strong market for a long period of time and a weak market for a shorter period of time. And that's essentially what most of us, I hope, will want to see. Stronger for longer, and those weaker periods are relatively subdued, sort of a 12-month window. Now, as a very, very strong reminder here, there is no guarantees of any of it playing out. But the point I'm trying to make here is that narratives can shift on a dime. And so if we do see this price come up and a correction, that would then start to flip a lot of people very bearish, saying that this cycle is now over. If this is going to continue on to go from a possible left into a possible right, what I think might happen next is another longer period of consolidation. So you could have that consolidation again at these higher prices, so somewhere above the previous old all-time highs, depending on how far this market runs up, or you could have it somewhere just under the previous old all-time highs, but you'd still want it above key significant support levels. And that would be wherever this 50% comes in. So wherever this top comes in would then show up as the 50% level. And then you could start to measure just how strong or weak the market is from that point. So if the market ran up to, let's call it 90,000, well, then you got your 50% level at around $53,000, which is still above previous tops of the previous cycle. It'd still be above its own 50% level here. It'll be above the ETF announcement period when it was released. And you could start to see anything in that zone as consolidation for a possible, not a guaranteed, but a possible second move to the upside once the whole current move had been digested. So looking at it from the low to the current high, it's been 25 weeks. So basically 6 months with no more than essentially 2.5 week correction throughout that period, which is pretty damn unheard of for Bitcoin. Prior to this current move, we'd gone through from the November low to the July top of roughly 33 weeks. So if I do a quick maths, it's about 8 months. And then the longest periods were about 9 week corrections. We also had a 9-week correction after that point. And for the banking crisis, now if we're pulling that period all together, it was roughly 4 or so weeks of declines in BTC. And so this period that we've seen now from the September low, about 6 months so far, there's really been no significant correction at this point. So it wouldn't be unheard of to see a longer correction after basically seeing no correction. The big point here, to not get swept up in if it does turn bearish, not to get swept up in any sort of narrative changes, is where does this market consolidate? What prices is it consolidating at? Is it consolidating at lower and lower prices, putting in a lot more lower highs, lower lows, and breaking past key significant levels? Or is it showing some sort of signs of strength and able to hold up at higher prices while it gets ready for its next move? We've seen Bitcoin do this in the past. We got 2019, 2020, essentially, well, COVID collapse happened right there, big pump up, and then the market was consolidating to see what was going to go on next. It wanted to see if it could break through the 10.5K level or if it was going to come back down and retest previous significant now support levels, because through this period, COVID was still out. We had the second wave and the third wave and all sorts of extreme drama that we haven't seen since, or pretty much most of us hadn't seen in our lifetimes, yet the price was holding up very, very, very strong. But it took quite some time. You go here from the last pump bar that happened in April. You had the halving happen in May. You had a small pump out here that broke out, came back and retested the highs, and then took off from that point. So in terms of time frame overall from the last pump to the upside until it broke out past all the previous tops here, it was about 6 months. 6 months of basically 30 to 40% price action, when previously it had done a couple of 100% going from 4K up to 8, 9, 10,000. So to really put emphasis on that particular area, the news dropped off. People moved away from Bitcoin. They weren't sure if it was going to make it because of the previous drama that had gone on. We also saw the halving come in roughly a few weeks after that final pump bar here. You could see from April. That was 6 months of price action. Essentially, it had gone nowhere in that period, from about 8K to a high of 12K, 50%, but it had a few pullbacks in between there. And so I'm not saying that it has to happen. I'm just saying beware in case something like that does happen. The beauty about that was the strength to the upside. You saw higher lows continue to form, even though the price action was going nowhere. When that happens, watch the views on YouTube drop off, watch the subscribers drop off, watch people stop making content, watch how boring it gets, watch how no one talks about it, watch how the Google Trends will basically drop off at that point. That is the key point that most miss. And then that spurs on the next moves to the upside. Now, I think it's important to remember again that none of this has happened. It might not even happen. But again, the big thing is, what if these narratives change? Are you prepared for it? Are you prepared for the possibility of this market running into new all-time highs and this move just continuing on, and then all of a sudden it just flips? Are you prepared for that? If not, maybe consider it. Keep an open mind. Come up with something that you think works for you, because it doesn't mean that things have to be over as soon as we hit a new all-time high before the halving. It could mean that the price just needs more time to consolidate and potentially consolidate at higher levels, which then fuels the fire for more upside. And if that upside comes, maybe it comes through in the second half of the 4-year cycle. And that date is going to be roughly Q4 of 2024. If you're to see a higher price than what the price is now, we're considering, or potentially there'll be a correction and the price goes higher than that, game's over for a left translated cycle. Right translated cycle is back on. Even if that top comes in relatively early here on the right, it's still a right hand side. It would just mean that the price would have to go down a little longer than the 12 months that it has shown in the past. Now this, I think, is still all a possibility. I'm not ruling anything out here, because at the end of the day, I don't have a crystal ball to the black side over here. We might even see it just run straight up and then down for years from that point in the left, or we might just see it where it is and just patter out from this point until we see another price to move to the upside, or we hit up and then it's all over from that point. I honestly don't know. I just want to be prepared for anything that could happen from there. Now, if we were to see a right earlier in the piece than what we have done in the past, where previous rights have relatively been on the second half of the second half, so essentially the last quarter of the 4 years have been roughly around that point there. If we're to see it in the third quarter of the 4 year, maybe it dies off for a little bit, which then lines up with the 18-year cycle as well, and you'd see that stock market start to head up again, or a lot of the attention would start to move across to the stock market before Bitcoin gets its final turn, which might in fact put in a lower high in the left translated cycle and then start to die off again from that point, leading into your 2028s, 2029s, where you'd see that halving again from 2028. But from that point, I think a lot of the markets would have had their time, and you would see a lot of downside corrections, collapses throughout the stock markets and real estate. So I'm suspecting that that sort of stuff is going to happen after 2026. Maybe real estate sort of peaks around 25, 26. They start to trend down while the stock market's going up. Bitcoin has another chance at going up along with the stock markets as well. It doesn't get that extra boost to the upside, forms a left translated cycle, and then everything essentially dies off for those last few years of the decade. That's one scenario, one game plan that I have for the next 5, 6, 7 years, especially as we lead into the peak of the 18.6 year cycle, due sometime around 2026, which I think then would start to roll over from that point. It's not a direct peak and then a collapse, but essentially roll over. Markets might have a final peak, and then things start to also head down with them in late 26, 27, 28, something like that. But it's going to be a longer correction than what we have seen in the past. So from record highs today to looking at 6 to 7 years, I hope you found some value from this video. I'm aiming to be here throughout that entire period. It's a long way from now, but we've been here for many, many years prior, watching this 18.6 year cycle head up to new fresh highs. So make sure you hit that like and subscribe button on your home of macro cycle analysis. Let me know in the pinned comment down below your thoughts about the 4 year cycle as I've looked at in today's video. Do you think this is going to be a left translated cycle or a right translated cycle, which may lead into another left? A lot of lefts and right today. I'll leave it with you there. Take care. See you at the next video. Peace out.